international market, a consistent sell-off in the equities market is forcing investors to rotate their investments to bonds. Yesterday, Nasdaq 100 was down by 5 percentage points and Dow Jones was down by 3.57 percentage points. This means there is a fresh interest from investors for US Treasuries, and that is keeping bond yields low, below 3% for now. US 10-year is now trading at 290. German 10-year bonds are still at 1.03, sustaining above 1% mark. In the crude oil market, crude is at $110.10 per barrel. Short-term range for crude is 107 to 113. In the currency market, dollar index DXY is at 103.77. After the recent highs trying to reach 105, it is now trading at 103.77 dollar index. Today's range for dollar index 103.38 to 103.94. We did not expect 104 today. USD CNY Chinese yuan is at 6.76. USD INR with a low of 77.61 closed at 77.61 near day's low. Resistance at 77.40 and support at 77.95 exists for USD INR today. Trading strategy for USD INR: RBI Forex reserve depletion by $35 billion is a known fact, and latest reserve numbers are $595 billion. 77.50 is breached and closed at 77.61 yesterday. Equity markets are down across the globe and India will be no exception today. Expect some FII sellings and rupee selling pressure taking USD INR up to 78 rupees per dollar very soon. But at the same time, RBI intervention is very much going to come and it will try to defend 78 level mark as well. In the domestic market, RBI MPC policy minutes were out yesterday. Inflation was the biggest worry for all the members. From the policy notes, 50 basis points hike is almost certain in the upcoming June-22 policy meeting. Market has already priced in repo at 5.15 percentage points from current 4.40 percentage points. That is 75 basis points rate hike in the next two MPCs, 50 basis points in June and 25 by August 2022, a totaling of 75 basis points hike. 574 GS 2026 closed at 709 versus 708. 654 2032 closed at 735 versus 737. 667 2035 closed at 750 versus 752. Almost 1 or 2 basis points here and there across the yield curve. In the trading range, 654 2032 expected to trade today at 734 to 741. MPC minutes will spoil the mood of the market and 741 is not expected to be breached. Non-SLR notable trades: CPs and CDs. Canara Bank CD maturing on 17th August, which is a 3-month CD, traded with an average yield of 5.09 percentage points. I repeat, 3-month Canara Bank CDs at 5.09. Similarly, HPCL's 1.5-month CP with an average of 4.75. 3-month NBFCs are now trading at 550 to 580, and hence we kept on telling that CPs and CDs and bonds are your best friends. In the bonds category, 3-year AAA corporate bonds are trading at 712, 5-year AAA corporate bonds are trading at 730, 15 basis points spread over GSEC. 10-year AAA corporate bonds are trading at 770, approx 20 basis points spread over GSEC. Please note that once the corporate bond supply hits the market, spreads will widen by at least another 20 to 40 basis points. Knight Research expects 5-year AAA corporate bonds at 755 from current 730, 25 basis points from here, and 10-year AAA corporate bonds at 8%, 770 currently, 30 basis points high from here pretty soon. That's it for today. See you tomorrow with the new episode from Night Snippets.